Controversial academic papers in finance serve as catalysts for progress, challenging established theories and sparking vigorous debate. By introducing new perspectives and questioning prevailing assumptions, these works encourage both researchers and policymakers to rethink traditional frameworks. Their influence extends beyond academia, shaping regulatory discussions and guiding industry practices. The ongoing dialogue and disagreement they inspire drive innovation and ensure that the discipline of finance remains dynamic and responsive. Controversial academic papers in finance serve as catalysts for progress, challenging established. A prominent example is the 2018 study, Anti-Competitive Effects of Common Ownership by Martin C. Schmalz, Jose Azar, and Isabel Tecu. This research explores how institutional investors holding significant stakes in multiple competing firms can influence market dynamics. By examining data from the airline industry, the authors revealed that common ownership was associated with reduced competition and higher consumer prices. These findings have challenged traditional views on market competition and sparked extensive debate among academics and policymakers, underscoring the far-reaching impact of institutional investors. Common ownership, where institutional investors such as mutual funds or pension funds hold stakes in several competing companies, can subtly shift corporate strategies. Instead of focusing solely on individual firm success, companies may align their actions to benefit the broader sector, knowing their major shareholders gain from industry-wide performance. This can lead to less aggressive competition, higher consumer prices, and reduced innovation. As a result, economists and policymakers continue to debate the true impact of this ownership structure on market competition. The significance of the anti-competitive effects of common ownership study is reflected in its substantial citation record, over 4,600 times as of May 2025, and its influence on policy, including a reference by the White House in 2020. This paper has become central to regulatory conversations and has inspired further research into the effects of institutional ownership, illustrating how rigorous academic inquiry can directly inform real-world decision-making and policy development. Turning to another area of debate, the 2025 paper, Beyond the Status Quo, a critical assessment of life-cycle investment advice, challenges conventional wisdom about portfolio management. Rather than gradually shifting from stocks to bonds with age, the authors advocate maintaining a globally diversified portfolio composed entirely of stocks throughout an investor's lifetime. This approach aims to maximize long-term growth through international diversification, prompting a re-evaluation of established beliefs about risk and retirement planning. The publication of this life-cycle investment advice paper ignited strong reactions among financial experts. Critics warn that a 100% stock portfolio may expose older investors to greater risk, particularly during market downturns. Supporters, however, highlight historical data showing equities' superior long-term returns and the benefits of diversification. This ongoing debate has led to renewed scrutiny of traditional investment strategies and continues to shape both academic research and practical financial planning, reflecting the complexities of balancing risk and reward across different life stages. Shifting focus, the 2010 paper, Too Much Finance? By Jean-Louis Arcand, Enrico Berkes, and Ugo Panizza raises concerns about the risk of an oversized financial sector. The authors argue that while finance is essential for economic development, excessive expansion can hinder growth by diverting resources from productive investments and increasing instability. This challenges the belief that more finance always benefits the economy and has prompted widespread discussion about the optimal size and role of the financial sector in fostering sustainable development. Together, these influential papers have transformed financial research by questioning the effects of common ownership, advocating unconventional investment strategies, and highlighting the drawbacks of unchecked financial sector growth. Their impact is seen in ongoing debates and policy discussions, including references at the highest levels of government. The continued relevance of these studies demonstrates how academic inquiry can drive meaningful change across markets and investment practices. In conclusion, Controversy plays a vital role in advancing financial thought and policy. When bold research challenges established norms, it sparks debate, encourages deeper analysis, and often leads to significant progress. By prompting researchers and policymakers to reconsider assumptions and explore new perspectives, contentious papers help build more resilient financial systems. Embracing controversy ensures that finance remains adaptable and forward-thinking, continually evolving in response to new evidence and societal needs.